Task 4.8. You are provided with information related to Sandilo traders. At the beginning of the month, they had 92,000 in their bank account and trading stock of 70,000 on hand. If I start with the opening balances, if I'm opening up ledger accounts / T accounts, bank has an opening balance brought down. It's an asset plus minus, so the opening balance appears on the debit side. It has a balance brought down of 92,000. Trading stock is an asset plus minus, and it has a balance brought down of 70,000. Now you can make yourself a note and use this as a base to work from. When the business receives money, bank is always debited. If the business makes a payment, then bank is always credited. If I look at trading stock, if the business bought trading stock, our assets will increase, trading stock will always be debited. If trading stock is sold, it means our assets will decrease. Trading stock is always credited. Enter the following transactions on the accounting equation. So if I look at the first transaction, bought trading stock by check 58,000. By check means this was a cash transaction. So as soon as a payment is made, it means that my bank account will always be credited. So we have bought trading stock. So bank is credited and my trading stock account will be debited. So if I record this on the accounting equation, the transaction happened on the 5th of October. This is a cash transaction and a payment was made, so it will be recorded in the CPJ. Trading stock was debited. Account credited, bank. Amount 58,000. If there's a column for the amount, you only need to write plus and minus under assets, owners, equity or liabilities. So if trading stock is an asset and it was debited, our trading stock will increase, our assets will increase. If bank is an asset and the bank account was credited, it means our assets will also decrease. Nothing happened with owner's equity. Nothing happened with my liabilities. The second transaction, sold goods for cash 20,000. The markup on these goods is 25%. So very important. If I'm selling goods, it means that when I bought trading stock, I'm selling it to customers to make money. So we are going to add a markup. The selling price let me show the calculations here. The selling price equals 20,000. The cost price, we need to calculate it. So to calculate the cost price, we need to take the selling price times 100 divided by 100 plus percentage markup. So if the selling price equals 20,000, we need to times it by 100 divided by 125. So the cost of the items that we sold equals 16,000. This was a cash transaction, which means that money was received. The selling price, the amount that we've received, will always go into our bank account. So if I'm doing my T accounts to show the selling price, it means that we need to show that we've received money from sales. The amount that we've received was 20,000. Our income will increase on the credit side. Because this was a cash sales transaction, my details is going to be bank. This will be recorded in my cash receipts journal. Every credit, there's a debit. So when we show this on the accounting equation and we show the selling price, remember we need to show the selling price and we need to show the cost. So to show the selling price, account debited, bank, account credited, sales. How much did the business receive? 20,000. Because this is a cash transaction, it will be recorded in the cash receipts journal. The transaction happened on the 9th of October. Bank is an asset. Our assets will increase. Sales is an income. It will have a positive effect on our owner's equity. Nothing happened with your liabilities. To show the cost, we need to show when we sell trading stock and what was the cost of those goods that we sold, which means that we need to open up cost of sales. Cost of sales is an expense to the business. So if we sold trading stock, our trading stock will always decrease our assets. What was the selling price? 20,000. Cost? 16,000. You never ever show the selling price in the trading stock account. What is the contra account? Cost of sales. For every credit, there's a debit. This will be recorded in our cash receipt journal. So account debited, account debited, cost of sales. Account credited, trading stock. The amount 16,000. Our assets will decrease. The expense will have a negative effect on my owner's equity. Now I've indicated the selling price and the cost price. On the 16th, allowed Bono to open an account. This means that we've allowed a customer to buy on credit. He bought goods on credit for 24,000. The secret code BHOKC was used. So this means we need to calculate the cost using the secret code method. So number one, identify the selling price. The selling price is 24,000. To work out the cost, we need to use the word black horse. It's a 10-letter word. The first letter starts with 1. Oops. Let's try again. There you go. The code is B, H, O, K, and C. So if I look at B, the first letter is B, so that's 1, H, 6, O is a 7, K, 5, and C, 4. So this is my cost. So with a credit sales transaction, sales would be credited to show that we've received an income. The selling price was 24,000, so our income is going to increase with 24,000. Because this was on credit, it means I cannot record it in bank. It cannot go into the cash receipts journal. This will be shown in our debtors journal. And people who owe us money is called debtors. So we will need to open up debtors control. This is an asset plus minus. So my details is going to be debtors control, and debtors control is going to be debited. Why? Because we sold goods on credit. So this will be recorded in our debtors journal. So to show the selling price, again, we need to show the selling price and we need to show the cost. To show the selling price, account debited, debtors control. Debtors control is an asset. People who owe us money, our assets will increase. Where does it increase? On the debit side, plus. Account credited, sales, if we receive an income, that will always have a positive effect on our owner's equity. What was the total selling price equal to? 24,000. This will be recorded in our debtors journal, and the transaction happened on the 16th of October. I'm not done. Now I still need to show the cost. The cost is going to be shown exactly the same as a cash transaction. We need to show what is the cost of the goods that we've sold. The cost equaled 16,754. Trading stock is going to be credited with 16,754, but from the debtors journal. When we sell trading stock, our details is cost of sales. When we buy trading stock cash, our details is bank. So to show the effect on the accounting equation, account debited, cost of sales, account credited, trading stock, amount 16,754, assets minus expenses will have a negative effect on your owner's equity. Nothing happened with your liabilities. The last transaction, 31 October, Bonner paid 18,000 of the amount owed by him. So it means that the business received 18,000 from the debtor who bought on credit. If the business receives money, it means that my bank account will always be debited. So how much did the business receive? The business received 18,000 from who? A debtor. So the contra account is debtors control. So debtors control is going to be credited with 18,000. Why? Because the debtor made a payment. This transaction will be recorded in our cash receipts journal. Have a look. As soon as a debtor makes a payment, they owe us less money, so your assets will decrease. So if we show this on the accounting equation, the business received money. If you receive money, bank is always debited. Why did the business receive money? Because of a debtor who paid 18,000, so account credited, debtors control, and the amount equals 18,000. Bank and debtors control is an asset, so your assets will be plus, minus. Nothing happened with your owner's equity. Nothing happened with your liabilities. This will be recorded in your cash receipts journal. Right, so now at the end of the month, if we want to know how much money is in our bank account, all we need to do is we need to balance this account. So if I take the debit side and I start adding up 92,000 plus 20,000 plus 18,000, it means that the debit side is equal to 150,000. So the credit side must be equal to 130,000, and the difference is 72,000. This is the amount of money which is left over in our bank account. So the business received 130,000. They spent 58,000, which means they have 72,000 left over. If I look at my trading stock account, to find out how much stock do we have left over at the end of the month, we need to balance this account. So we started with an opening balance of 70,000. 70,000 plus 58,000. The debit side is equal to 128,000. It means the credit side must be equal to 128,000. So the difference is my balance. Carried down means balance brought down. So 128,000 minus 16,000 minus 16,754 means that we've got 95,246 left over. If I want to find out what is my total sales, sales consists out of cash and credit sales. If I add that up together, it equals 44,000. To find out my total cost of sales, which consisted again out of cash and credit sales, 16,000 plus 16,754 equals 32,754. This is one of the reasons why we show the cost if goods are sold, not only to keep track of our trading stock, but now we can look at our total sales minus our total cost of sales equals our gross profit. So if our total sales is 44,000 minus the total cost of sales, it means that we made a gross profit of 11,246. If I want to know what is the outstanding debt, all we need to do is we need to balance this account, the debtors control. The debit side is equal to 24,000, which means the credit side must be equal to 24,000. The difference is called my balance carried down, and that will enable us to know what is our balance of our debtors control. So 24,000 minus 18,000, it means that 6,000 is still due.